Hi, everyone. Thank you so much for joining us today. This is Inga Hansen, editor of MedEsthetics magazine, and we're going to go ahead and get started. Today, we'll be discussing how to get the most from your patient financing company, including questions you should be asking to make sure you're getting the best plans for your patients and your practice. Our presenter today is Nayson Rouhipour, who's the Director of Business Development at LendingUSA. They are the official financing partner of the American Academy of Cosmetic Surgery and the MedResults Network. Welcome, Nayson.
Thank you, Inga. Thank you for hosting this awesome webinar series and for inviting us along. As Inga mentioned, my name is Nayson Rouhipour. I'm the Business Development Director of LendingUSA. I'm also joined today by Devin Circus, who is our Director of Sales.
Good morning. Thank you very much for having us.
So, as Inga had mentioned, we are going to quickly go through getting the most out of your financing company, but also really understanding the position of your financing company within your business, how to promote it best, and the tips and tricks and best practices that really successful offices are implementing to get the most out of financing from their office. So without further ado, I will go and get started. If you guys have any questions during the webinar, please feel free to put them into the chat, and we'll get to them at the end. So what we'll cover: how to compare financing providers, looking at the costs, the approvals, the service. Just a holistic approach to looking at every aspect of your business is always going to be important, but really doing the same thing with financing with other service providers is going to help you get the most out of that relationship. Increasing applications, the strategies and tactics that successful offices use to be really successful with financing, and then any key takeaways and any questions you guys may have. So, quick introductions. As we said, my name's Nayson. I'm one of the business development directors here. Devin is one of my colleagues. He's the director of sales, and he looks after the onboarding process for all of our new partnerships and merchants. So, very quickly about us, just so you guys understand where we're coming from. We're designed to be the most practice-friendly point-of-sale financing solution available. Our approvals are between 1,000 to 35,000. We are exclusively endorsed by the American Academy of Cosmetic Surgery. We're used by at least a few thousand medical practices across the US. And if you guys ever need any more information about that, you can either reach out to us directly or through this webinar as well. So, how to compare patient financing providers. Now, again, as I said at the beginning, it's always important to look at things from kind of a holistic top-down approach. And what that means is don't look at any one headline rate. There are lots of companies out there who will focus on a single USP, unique selling point. And you know what? That's their business to do so. That's the way they're going to go to market, and that's the way they're going to sell. But realistically, one data point is never going to be sufficient to tell you how effective or successful a partnership is going to be. I'll give you a good example. Within the medical financing world, the most common questions we get asked are about discounts, so how much do you get charged per loan, and also then approvals. But just because someone's going to be able to approve everyone doesn't mean that's the right partner, because the discount's also going to be an important factor to bear in mind there. Are there any chargeback penalties? What is the recourse to you as a business, as a merchant, with that lender? Are you on the hook for, let's say, a first payment default? Are you on the hook if they don't pay after 6 months? What percentage of the loan contract and the financing, whether it's done through credit card or a loan, are you really going to be receiving it on every single file? All of those things are important, but in a silo, no one of them really should help you determine whether or not this is a good partnership to look at. So just going through this list, discounts is the one we hear the most. Obviously, people want to have as much of the revenue that they're generating go into their pocket, but also to bear in mind, when a lending company is coming in, they're there to help you realize and convert that business that potentially would not have converted otherwise. The patient that comes in speculatively looking for a consultation on one of a number of different procedures, but don't have the funds available immediately. Financing is there to help you convert those clients. That's really what it's meant to do. And your discount with regard to that should only be seen as a cost of doing business. We all pay credit card acceptance fees to take Amex and Visa and MasterCard. So the discount you pay to your financing provider should really be seen in the same vein. And as a cost of doing business, to the increase in revenue that you're going to go see. Chargeback penalties. Is there a penalty for refunds? Is there a penalty for people complaining? You know, we hear a lot about some of the revolving finances that are out there. Revolving just means credit card issuers. So we hear a lot about them that they're very, very averse to any kind of dispute from the consumer side. Now, if your financing partner is going to withdraw those funds every time someone makes a complaint, that might also be a consideration to bear in mind. That is something that we're hearing more of. And the Card Act, which is one of the federal statutes that looks after credit card transactions, is very sensitive, shall we say, to borrower disputes in a way that finances that would use an installment loan like ours would not be, because there are different requirements. Enrollment, membership, usage fees, any of those things are also important to look at. Generally speaking, nowadays, no one should be paying any enrollment fee or a membership fee to utilize a financing company. Pretty much all of the large reputable organizations in the market will not have any membership or usage fees. It should be an additional option for your business, for you guys to utilize as you need to. Promotional financing fees. This one's also very important to look at and really truly understand whomever you go with. One of the biggest providers on the market has a sliding scale of discount based upon the promotional period that the borrower ends up choosing. So you would pay one level of discount if they were taking a 6 months interest free, and you'd pay a very different, much higher level of discount if they wanted to take the 24 months. And it's very important to understand that. It's very important to understand what you're comfortable with both accepting in terms of a discount, but also there's a trade-off there. We all know that in this country, every industry pretty much at this point works on financing. You wouldn't go into a car dealership without looking at their finance promotions. You wouldn't, go into nearly any big box retailer, all have these financing promotions, and even Apple at this point. Apple, if you go in to their stores to go buy a new iPhone, they will offer you financing. Everyone does it, and it's just kind of balancing the advantages to having a longer interest-free period, because that will generate you more interest from your clients and probably be easier for you to close those clients as well. But also, if that's going to have a significant impact on your bottom line, on the amount of funds you'll realize from that transaction, then that's also a consideration. At the end of the day, like I said at the beginning, taking a holistic view on these things is important, and also understanding the trade-off. It's a cost of doing business, but you will all each individually have your own lines to do so. And so understand what you're willing to accept and the advantages and disadvantages.
The other thing to keep in mind, and all great points, Nayson, but the other thing to keep in mind is some of these components of the entire process also affect your patience. The length of the promotional pricing and some of the other components that make up who you're working with and what product you're offering. We talk to merchants all day that they aren't concerned with the impact on the patient. We speak to others that don't want to work with certain companies unless the patient has certain specific points that are important to the practice as well. So it's not just your pocket as well as your terms, it's also the impact on the patient to keep in mind.
Yeah, absolutely.
Because the loan, whereas the loan is with the provider and the patient, that patient is still going to remember you as having, quote unquote, put them into that loan or put them in touch with the lending company that they got the loan with. And if you're of the type of practice where there's follow-up appointments and continued business down the road, and I would think everybody wants referrals, those are a couple things to keep in mind as well.
That's actually a fantastic point, Devin. I appreciate you bringing it up. I think that we're all aware now in this day and age that reputation pretty much can make or break any business, especially businesses so message sensitive as ours, whether it's in finance like we are specifically, or in the medical world like you guys are. Reputation is everything, and the financing company you choose will bear a reflection upon your business. As Devin said, if someone has a really bad experience with your financing company, they're going to associate that with you as well, because you fundamentally were the ones that promoted that option. So always look into your financing company's reputation themselves, their Trustpilot, Google reviews, all the same standard ways we all look at. But do it from the point of view of your borrowers. Is this a lending company that's going to treat my patients right? Are they going to look after my patients? Are they going to look after my reputation when dealing with my patients? All of those things are important. And I will say, for the most part, most of the lending companies that are operating in the space right now do bear in mind all of those things. But it is important. Finally, the last thing I'm going to talk about briefly is marketing support. We, for example, and I know a number of the other lenders, will provide a very high level of marketing support to the businesses that we work with. That realizes itself not only in terms of brochures inside the office and things like that, but really a true marketing support, helping you understand how you're positioned, helping you to optimize your website, the right keywords, where you're currently ranking, how your reputation itself is looking online. Like all of those things come into marketing, and how your online presence is structured. And a lot of the financing companies will provide free assistance on those subjects. And so that's always an extra area to kind of bear in mind. Approvals. I said after discount, after what it's going to cost the medical office specifically, the second most common subject I get asked about is approvals. And I'm going to kind of, again, I love using the word holistic, but I'm going to kind of take a very holistic macro approach to this particular subject, because I think a lot of people get hung up on FICO score specifically, or this or that, when it comes to credit. The most common data point that people, if I ask 100 people in the population what they understand credit requirements to be, the most common data point that they're going to come back with is FICO score. Now, that is one of the most important ones to look at. Having a lower minimum FICO score acceptance from a lending point of view means you're going to get more approvals. But your FICO score isn't the be-all and end-all of approvals. It really is not. Income is another one, but more important than income is what lenders will call DTI, your debt to income ratio. What that means is how much money you're spending on debt, on unsecured specifically, not your mortgage, but your credit cards, your auto loans, and your installment loans all together, and what that is a percentage, a ratio of your total income. That tells you as a lender what this person's capability is to pay back new debt. If your FICO score is a representative coefficient of how you historically performed with debt, your DTI indicates to a lender the capability of paying back new debt. So that's always good to bear in mind, because I cannot tell you how many times I'll have doctors' offices come to me and say, oh, we had a patient with a 750 or an 800 FICO score, and they were declined with everyone. You know, that's rubbish. And I'm saying, well, you know, you've got to look at it from a different perspective. You've got to, financing companies do. We look at things holistically. We evaluate every borrower from every angle to see if they are truly a good person to lend money to. And, you know, as a lender, you don't want to lend money to someone who is unable to pay them back. It's not good for the borrower and it's not good for the lender. And so when evaluating lenders, FICO score is relatively important, but honestly, what's more important from a financing standpoint is the type of product they're offering. So there are really only two types of financing company within the medical industry. There are credit card issuers and offerers. The likes of Care Credit offers a revolving line, even though it's not a Visa credit card, it's their own type of credit card. And there are a number of other medical credit cards in the market. And then there are the installment loan lenders like ourselves. And I'll mention Lending Club quickly, whether Devon's going to growl at me or not. We're installment loan lenders. So the difference is, if you imagine getting approved for a $10,000 credit card and then using all of that $10,000, there's something that lenders will look at with regard to revolving lines of credit, and it's called utilization. And what that basically states is, if you've got a $10,000 credit limit and you've used all $10,000 of it, you've maxed out your utilization on that line. To a lender, that's really not actually very good, because it means you're getting into your emergency funds, you're getting into the limit of your available credit. That also has a very large negative impact if someone was to use all of their available credit on their credit cards to a lender being willing to offer them new debt. In spite of the DTI looking great in this theoretical instance, the utilization being very high is an automatic disqualifier for most of the Main Street banks and most lenders, because it's an indicator that someone's on the downhill, even if they're not. We're only able to look at data points as lenders. So that as an indication is a negative one. And so putting someone onto a credit line that is revolving and then maxing it out is really going to have a negative impact onto their credit. On the other side, taking out an installment loan is kind of seen as good credit. It has a fixed monthly payment, a fixed term. They're always going to pay it down. It's not like a credit card where if you just make the minimum payments, it's going to go on for 20 years. A loan has a fixed term of, say, 3 or 5 years. They pay it down. It also doesn't have the same negative impact to the borrower on their credit profile. So understanding all of these things, you don't have to become credit experts, but what we generally advise is that there should be one of your patient coordinators or one of the people that are dealing on the front side with the patients should really kind of get on top of these concepts and be able to talk about them comfortably. Because the other thing I was going to come to in a second is don't offer one financing company. Offer a few. Have your own mini waterfall. Offer the cheapest one that you can offer at the top and then go down through additional options to kind of get as many approvals as possible. Don't put all of your eggs with one lender. Have a few, offer them all, and see which one will give you, the most approvals at the best rates and so on and so forth. But understanding the different types of lender as well is important, just because as we go back, looking after your patients is your number one priority, and you are fundamentally promoting a company and a service in offering financing. Approval amounts. So just to kind of go back to that the distinguisher between credit cards, revolving lines of credit, and installment loans, it's far easier for an installment loan lender to approve for higher amounts than it would be for a revolving credit card lender. The reason being, if you imagine when you approve someone for a credit card, you're effectively approving them for life. So they could take some money on the credit card, pay it down, take some more, pay it down. Whereas with an installment loan, they have a fixed amount, they use it, and they pay it back. So if you do a lot of higher dollar amount procedures and services, it would be good to have in your repertoire a installment loan lender as well as a credit card lender for maybe some of the smaller services of, simple injections and fillables and those kind of things. So is it practice friendly? And we kind of touched on this earlier with regard to marketing support, but that's only really a tertiary consideration when we're talking about, is a lender practice friendly? The things I hear the most about is chargebacks. A lot of the revolving credit issuers have different parameters on chargebacks and disputes compared to the installment loan lenders. That's a very important consideration to understand. How easy are they to use? You don't want to have a system that may sound great on paper, but be so clunky and so kind of antiquated or difficult to navigate that your team internally are unable to do it. There's just so much of a headache for them that they don't want to do it. Fundamentally, as we said at the beginning, financing is there to be an extra tool, an extra arrow in the quiver of your patient coordinators and your teams to be able to close more of the business that you generate to come in the door as potential patients. So understanding it from that point of view, is it easy to use? Is it easy to promote? Is it easy to talk about? It's very important, because if it's not, I'll be honest, in my experience, the people at your end won't offer it. It'll become too much of a hassle, and they're like, you know what, we'll just move on to the next patient. We'll find another way to do it. Funding times, very important. I always get asked this at conferences, how quickly can you fund? Will you send me the money the same day? Now, unfortunately, I don't know of many lenders, if any, that do same-day funding yet. I think we're all in the works of trying to get that to be a reality in the next few months. But what you want from a lender is for them to guarantee the funds once your patient has signed the contracts. That's really the most important thing. A funding time of 3 or 4 days really isn't too much of a negative. What is important is that the lender guarantees that you're going to get paid once the patient has signed on the spot. All that will enable you to do is same-day services. What you really want to be able to do with your patient financing company is enable a patient to walk in off the street, sit down with your patient coordinators, choose the services they want, get approved for financing, sign on the dotted line electronically, ideally, and then go in for services immediately. That's the ideal life cycle of how your patient should come in and utilize financing.
Especially in situations of impulse purchases. And I'm going to assume, obviously, I can't ask a question and have you guys respond right now, but I would assume that most of the practices that we're talking to on this webinar have a lot of impulse type purchases. So it's really nice to know that a patient can fill out a form, sign documents, be approved for a loan, and that you have the guarantee and the comfort of knowing that you're going to receive funds in 2 to 3 days, and then be able to move forward with that procedure right then and there.
Yep, and Devin hit the nail on the head. I think for a lot of the procedures and services, a lot of our medical officers and partners will do, it's an emotional sale. Let's be honest, it's an emotional sale. It's an aspirational service that they're looking for. They're trying to improve their quality of life, or they're trying to improve something about themselves. And so being able to kind of capitalize when you've got someone in your office that really wants to move forward and enabling them to do so, that's what your patient financing company should do. They should be able to make your lives easier and help you ultimately convert more of the business that comes to your location. Consider their customer service. So the support aspect is always going to be important, especially for your teams. To be able to build confidence with your patient financing company, they really got to understand that they can at any time call someone, know who they're calling, trust that their guidance is correct, trust that they'll be reactive and responsive when they need to be. All of those things are important. How quickly are issues resolved? Don't ever think that there is a service provider in the world that is perfect, because there is not, and that's going to have an incorrect expectation. There are always going to be issues with any service, whether it's your website developer, whether it's the guys that come in and clean your offices, whatever it is, there'll be issues at some point. But it's, from my perspective, always important to see how a company reacts to an issue. You know, are they one of those companies that just shifts the blame all over, and do their employees do the same? Or is it a company that really instills a sense of responsibility top down through their teams, so that whomever you're speaking to, you're confident that the issue's being heard, it's going to be resolved, and it's going to be resolved in a timely manner? Is their service also tailored to your practice's unique needs? There are some lenders out there, and they're more niche. I don't believe that there are many in the industries within which the network we're speaking to today are in. But to give you an example, in the fertility market, there is a lender called ARC. And ARC Financial is very specific to fertility. It's all they do all day long. And so they are completely tailored to the needs of those types of practices. Outside of that, the lenders that work within the medical market, for the most part, are tailored to understanding both doctor-run and nurse practitioner-run practices, and understanding the distinction between the two, how they offer their services onto the market, all of those kind of bits. And it's important, you know, if you go to Chase only knows banking. Whereas if you go to a lender that really lives and breathes within the medical market, then they're going to be able to give you those best practices, that support at a level that really you all do need. As I said earlier, reputation. Check out their reviews, Google+, BBB, Trustpilot, Birdeye. What are their borrowers saying? But also, what are their doctors saying? What are their office managers saying? That's always a good indication, I think. Doctors, sometimes in the business owners, they'll only see the bottom line. And so they could be very happy with a lender. But on the other side, the office managers who are dealing with them day to day may have a different opinion. And personally, I think that the office managers are the ones that really have, you know, a great position with regard to influencing the success of the business, but specifically with financing. They're the ones that are dealing with the day to day, and they're the ones that can acutely tell you who's difficult, who's easy, who gives the right support, you know, all of the salient details, shall we say, that matter. But as I said earlier on, it's always good to have a few financing options available. You know, no one's going to charge you a monthly fee, and if they do, that's a good indication to not maybe work with them. But the big reputable players won't charge you a monthly fee. Work with a few of them, and then listen to the feedback of your staff and your team. Understand what they're saying, because just because a lender says, "Oh, our approvals start at 550," they may still have a lower approval percentage of your patients than a lender that starts at 620, just because of the way they evaluate approvals. So never look at the headline rate. Look at things holistically, and look at all of the aspects of the relationship to really make your judgment. So now we're going to make a bit of a pivot, and we're going to talk about usage. Actually, the best practices, the strategies and the tactics that really, really successful offices will use and utilize to get the most out of their financing relationship. So the first and foremost one that I always like to talk about is offer it to everyone, upfront and equal, as our president, Mike Tester, will say. You know, offer it in the same way you would offer accepting Visa or MasterCard or accepting cash. You know, you're never going to turn someone away that wants to pay everything down on a check there and then. But if you offer it to everyone, it does two things for your business. Firstly, it takes away the onus of having to present it, having to have that maybe slightly difficult conversation about do you need financing or not, or whatever. If you offer it upfront and equally, they're going to be aware secondarily that it's available. You know, we accept Visa, we accept MasterCard, we accept financing through our partners X, Y, and Z, we accept check. That way, you can then focus more on the medical side, and if they want the monthly payment option or the financing option that you've mentioned, they'll ask for it. And it switches the roles around in that instance. It doesn't put the onus on you guys, it puts the onus on the patient to tell you exactly how they want to walk through the process.
It also alleviates the uncomfortable conversation of the patient asking for it. We hear from clients all the time that by offering it to everybody and then later having conversations when somebody takes it, that not having the patient have to ask for financing, but offering it up front makes it a lot easier for the patient to accept it, and also take a service or an extra service that they may not normally have done so if financing wasn't presented to them.
Absolutely, absolutely. And it is, as I was saying earlier and throughout, it is more than a rainy day option. It shouldn't be seen as a last resort. It should really be seen as an integral part of the business, just like your website is. Financing is just another tool to help you grow your business. And by offering it upfront and equally to everyone as an option, you'll realize that the people that need it will ask for it. The people that don't need it won't. And it's as simple as that. Something that we also really, really recommend, especially for the practices that we personally go and visit here in Southern California, is don't ever judge someone as they walk into your practice. My wife is a great example. She makes a boatload more money than I do. And she wears all Gucci and all those kinds of things. So people, generally speaking, if she walks in, they'll assume she has a lot of money. But she's the classic example of someone who will put everything on financing. And she'll want to because she doesn't really keep a huge amount in her savings account, shall we say, or her checking account. She just uses it to pay down all her bills. So don't ever judge that lady that comes in with Yves Saint Laurent and Louis Vuitton and all those kinds of brands and assume that she may be able to afford these things. Again, offer it upfront and equal. It makes it a far lower kind of sensitivity of a subject. And if they want it, then they'll ask for it. Where should you offer it? Now, this is one that we get asked about all the time. You know, how should we present it kind of indirectly, covertly, or those kind of things without necessarily pushing it in people's faces? Well, there are very simple areas. Within your office, from a marketer's perspective, you'll have a great amount of real estate with which to kind of communicate with your patients. Some of that will be patient education information. Some of that will be kind of your own practice information and the services you offer. But you should also dedicate a good portion of it to the services outside of your business as primary that you offer to help you. So whether that's the products that you're selling or the financing is available, that should be a consideration. Putting it at the point of sale next to your register or your patient, your initial kind of receptionist area, also important. Putting physical brochures in those areas so that people can read about the financing programs you have available while they're waiting. All of those are great places. High traffic locations are generally going to be the same places in your industry. You know, your patient waiting rooms, your patient consultation rooms, those kind of areas, also great. Finally, online. You know, it sounds very simple. It sounds maybe very basic, but for the most part, nearly all of your patients are going to evaluate you guys based upon your website and your Yelp and all of those kind of areas. So promoting the fact that you have financing through a banner on your website, or even something as simple as financing available, ask us in office as a small blurb right at the top next to your phone number. All of those things are going to drive additional traffic to your business. It's been proven time and time and again that financing, when offered and made available correctly, will do two fundamental things for your business outside of conversion, outside of making more business for you. Number one is it will generate your higher number of leads or potential patients. If you put it on your website and other areas, it will mean more people are willing to come and do the consultation with you initially, or more willing to have that conversation with you when they may have just been speculatively looking at your website for services that they in the future may want. Secondarily, and actually I think maybe even more importantly, is financing will increase your average sale. Like, simple. Hitachi Consumer Services did a study last year. They looked at many thousands of their partners globally, and I think it was over 56% of clients that of theirs that utilized financing in some form saw a significant, more than 20% increase in the average cost of sale. All that means is if someone walks in and has a set budget, then generally they're going to spend that set budget. But if they put it on financing, then they're going to have more of a wiggle room so that you can add on additional services. You know, if they came in initially just for a specific area for Botox, for example, you potentially could get them on some Botox and some fillers and some other injectables because they have more purchasing power in effect. You know, the way I always like to talk about it with our clients is there's a difference between asking for $3,000 more upfront and asking for $50 more per month. And one of those is far easier for a patient to understand and accept. And ultimately, for you as a business, you're going to realize a higher average sale cost. People are going to take more services on average when they use the financing compared to when they don't. Boosting your applications. So use the marketing material. Does the lender you work with as well, specifically, do they provide good amounts of marketing material? Do they provide website banners, brochures, posters, window decals, welcome mats, whatever it may be? You want your patient financing company to be able to help you by providing a lot of those resources so that, as we said earlier, you can offer it upfront and equal. You don't have to have the difficult questions about what that lender's approval or not is. You can give them the materials while they're waiting in the waiting room, and they can get themselves up to speed and then help you by informing you of which option they want to take. Train your staff to sell. I think, if I'm being honest with the industry we're speaking to, I'm sure most, if not all of you, can already understand that one and have already implemented sales techniques internally. But selling with financing has a slightly different play to it. It's not about so much focusing on the service, because at that point, when you're discussing financing, the service has already pretty much been closed up. It's more about focusing on the monthly payment. That's it. That's whether it's in the car world, whether it's in the mortgage world, whether it's in the mobile phone world. You're really going to be focusing on, is this an amount of money you can afford per month? Yes? Fantastic. Could you afford an extra $50 and we add on these additional services or these additional products that you may desire? Those kind of things, those kind of both upselling tactics and focusing on the monthly payment, those are always going to help with converting more of the prospective patients into actual patients. Having your patients apply early is also important. It means that you'll know who is approved and who is not right from the get-go. So someone that potentially doesn't have the funds out of pocket to pay for the procedures they want and isn't approved, that's a very different conversation, and you can have it early without having spent significant resources and time going through all the different options. If you have them apply early and have that conversation, very early on in the process, you'll know, and your teams will know exactly what that patient is working with, what their purchasing power is, and potentially what their options are. So, as I was just saying, financing can mean more purchasing power. Sorry, I probably should have gone through the slides in the order, but taking advantages of maximum approvals is important. A lot of the time we'll see we've approved someone for $15,000 and they're using 4. Now, that's fine. In an instance where that's what the patient wants, absolutely fine. They can come back in 6 months and maybe take out another loan for another 6 months worth of services. But on the other side, why not? We have a lot of clients that do laser hair removal. And rather than just taking, a 6-week service, they'll bill someone out for maybe 3 months. And that works because they're then more comfortable with that patient. The services are already booked in. They can then more reliably plan for the future from a financial standpoint and from a business standpoint. So taking advantage of the maximum approvals is always going to be one of the biggest benefits that any financing company that you work with is going to be able to offer. So I know that was a lot of information in a relatively short amount of time. I hope I didn't bombard anyone, and I'm sure you'll be able to go through this webinar at your own convenience after the fact and kind of pick up on points that you may have missed. But let me just go through the key takeaways as we see them. When picking a lending provider, approval rates and fees do matter, but as we were saying, look at it from a holistic point of view, look at it from a macro point of view. All the factors are important. Customer service, ease of use, promotional offers, all of those things are going to really impact your ability to utilize financing. And so look at it from all of the aspects. How long a promotional period am I comfortable offering, knowing that the discount to me is going to be higher the longer I offer? What's the trade-off in my business? What's my margin? So how is that going to affect my trade-off? Understanding all of those is key. I know you all understand your business already, and so just putting in financing is an additional consideration. Encouraging your patients when to apply. This is, for me, the most important thing. Whatever your processes internally end up being, and I always advise, A/B testing, mixing and matching, trying different things out. But ultimately, you'll get to a point where your office runs like a Swiss clock, well-oiled machine, and you'll have your processes ingrained. And just being comfortable with them, being comfortable where you're comfortable is important. So whether that's right at the beginning, you ask everyone up front, or whether that's kind of through the more subtle ways of offering it by making sure they're aware of it, own your processes. Own your processes and make sure your team and your staff own your processes, because ultimately the buy-in needs to be at every level of your organization. Offer the financing at multiple points is also important so that the patients feel comfortable about it, so that they're not the one bringing it up. As Devin mentioned, it's a lot more of a sticky wicket, shall we say, for the patient to bring up, I may need financing, than it is for you guys to offer it. You don't want them to feel uncomfortable. Just, make sure they know it's available, and make sure that if they want it as an option, they're able to take it, no matter the point in the process with you guys they're at. If you want more information about all of the topics we've gone through so far today, we do have a great ebook available that basically talks through this from a soup to nuts perspective, and how financing helps your practice, how to compare different financing companies, more tips than I've possibly gone through thus far. You can download this, and I'm sure the kind people at MedEsthetics will give you a link to do so as well. And then if you wanted to schedule a demo with us, with one of the amazing people on Devin's team, again, you can click here to do so, or you can call us at 877-376-2683, and we can just schedule a demo for you and show you exactly how we operate. Thank you very much for your time, for your attention. I apologize for any of my British colloquialisms that may have been a little misunderstood. Devin's there nodding next to me as always. If you have any questions, we'd be more than happy to address them now.
Thank you so much, Nayson and Devin. And yes, we do have a few questions. This is Inga again at MedEsthetics. And if you have a question, please do type it into the question bar on the right-hand side of your screen. You had talked about the importance of stress training for all of your team members. How often should that training take place? And is that something that you guys provide either online or by coming into the office?
So that's a fantastic question. In our experience, I don't think it's a secret that there is turnover in all industries. So training is one of those things that I think if your teams are the same, a once a year refresher is sufficient. And again, whether it's us, we offer ongoing support and retrainings indefinitely, in effect. And most of the other financing providers do the same. With new staff members, we always recommend to have us also retrain them again, so that they're aware from every level kind of what their responsibilities are, of how to do it, to be comfortable with it. I think more importantly than anything else, the trainings are there to make the teams in your offices comfortable with how to navigate not only the kind of logistical sides of financing, but also the conversations also making sure that they're comfortable having those conversations with the clients. You know, I always laugh that in some ways, the medical world is a bit different to other clients of ours, because, you know, they're most comfortable talking about probably the most sensitive stuff, people's medical histories, and sometimes they might get shy about people's financial histories or financial positions. And really, they should be as comfortable talking about the financing side of things as they are talking about the medical side. The frequency of retraining really just depends upon how you as a business owner are seeing it work. If you feel like there is still some ambiguity in the processes, or there is not enough confidence in your teams, then have them retrain once every quarter, once or twice a year. Your financing company will always be happy to provide that support, because ultimately, especially for us, and I'm sure the management teams and the others, we see it as a symbiotic relationship. The better you as medical officers do with financing, the better we as a lender are going to do at being a lender. So it is on us. The onus is on us to make sure that everyone's comfortable and everyone understands how to do it. Outside of that, you know, a once yearly refresher training is more than sufficient to make sure that the teams are on top of any process changes or anything else that are going on. But that is a very good question to ask. I think ultimately, as new staff members join, they should be retrained, both internally by the teams that have existed and by the financing company as a whole.
And in addition to training, as Nayson mentioned, to answer the question, as Nayson did answer the question, what we also provide, and is important, is ongoing support with our account management team. We have set up our account management team by vertical. So med spas work with one individual who's here seamlessly 12 to 14 hours a day to answer any question that his med spa clients have at any point. So there's the training when necessary, but there's also the availability and the opportunity to call in and get any type of guidance or any type of tips, or even just a question from our representative, our account manager, who works specifically with med spas.
Yeah, that's a fantastic point. And actually, I think that it's always good to understand, most of the time with your lending companies, their account management teams are going to have a significant amount of institutional knowledge for your industry. They're going to really understand what makes a practice successful, because they're going to see the full spectrum of practices within your industry.
Terrific. And you had talked about looking at or asking about things like chargeback penalties. And there's a question about if patients default on their payments. Is there an industry standard in terms of what the practice would be responsible for? Is there a reasonable rate that people should be thinking of?
No, that's actually a fantastic question. I did touch on it earlier when I was speaking about recourse. So the recourse to your business is specifically, all that means is what liability you would have to performance. So whether or not the person defaults in the first month or the 6th or the 10th, what percentage of what you received in your initial financing contract would potentially be able to be pulled back based upon the recourse agreement that you have with your lender. Now, so that we're clear, there are two kind of levels, there are two aspects to this. On the one hand, most of the reputable lenders in the market right now, ourselves, Care Credit, and the others, they don't have recourse based upon performance. And what that means is, if someone takes your services and is happy with them, but for whatever reason has a life event and is financially not able to meet those obligations, then you don't get penalized whatsoever. That's up to the lender. That's, for most of us, it's the way we do lending. It's a very large diversified portfolio of lots and lots and lots of patients. And when you look at things from that kind of level, of course, there are going to be some defaults. Of course, there are going to be some people that you underwrote that you thought would be good borrowers that weren't. And that ultimately is on the lender's shoulders. And that's how we see it. And for the most part, that's how most of the lenders see it. There are some that do have a recourse, and those are ones you really should watch out for, because they may have great headline rates, but that could become a very expensive relationship down the line. On the other hand, so that's recourse related to performance. On the other hand, I did also touch on the subject of chargebacks, and that's a little different. So as we mentioned earlier, there are two types of lenders. There are the revolving credit card lenders, and then there are the installment loan lenders. The revolving credit card lenders have a slightly different regulatory environment with which to adhere to. And how do I put it? Their ability to insulate both yourself as a medical practice and themselves as a lender from disputes is different to an installment loan lender. So I'll kind of go through that again in a bit more detail. If a contract was completed through financing on a credit card, the level of responsibility to you as a practice is higher in some ways than it would be if that contract was completed through an installment loan. So in this hypothetical example, you have completed your services as described. It was a successful procedure, nothing went wrong, but for whatever reason, and this happens in the retail work, for whatever reason, they wanted to complain afterwards. Now, with an installment loan lender like ourselves, we specifically, I'll give you an example, we would want the dispute to be resolved by yourselves with your patient. We would only ask that you provide some proof that there was an invoice, the services were completed, but other than that, ultimately, we're saying that we're in enrolling and in working with a medical practice, we're saying we're comfortable to work with that provider, they do a good standard of business, and they provide a high quality of service to their clients and their patients. So we would want you as a medical office to resolve that dispute as amicably as possible, understanding also that sometimes there are some patients in the world that for all the will in the world, you can't make happy. And that's just sometimes the way it works. On the other side, a credit card lender, because of the regulatory environment they'd have to kind of adhere within, they may not be able to do, maybe not be able to honor that in the same way. The Card Act has a much more stringent level of satisfaction, and the onus would then be upon the medical office to prove services were completed as described satisfactorily to the patient, and nothing more could have been done. And even then, I'm not going to give names because I don't like to say anything about our competition, but I know of lenders, very large, reputable ones in the industry, who are, they're getting into a point where a lot of their network is becoming frustrated with these chargebacks because the level of kind of clarity that they can provide from a legal standpoint is actually quite limited. They can just say that there's a dispute and this is what they're saying, and they have to go by the letter of the law. So understanding what your lender's chargeback policies are is probably more important than recourse, because for the most part, as I've said, most lenders that are operating right now don't have a recourse to the medical office based upon performance of the loan or of the contract. But there will be a varying degree of support that lender is willing to provide in the instance of a dispute, in the instance that for whatever reason that patient doesn't like your office anymore and wants to complain. And again, I don't think a lot of the time that's a reflection on the medical office. I think that that's just a part of doing business in the retail market and dealing with patients as a whole.
Terrific. And we are running out of time, so there are a couple things I just wanted to remind everyone. If you want to look back at this webinar or share it with your staff members, it will be available in about a day at MedEstheticsMag.com/webinar and on our YouTube channel. And we will also follow up with a link to LendingUSA's ebook, so you also can review that and get a little bit more in-depth information and share that with your staff. So I want to thank everyone for attending, and thank you again to Nayson and Devin for putting this on.
Thank you, Inga. It's been a pleasure.
Thank you very much. We greatly enjoy it. Look forward to doing it again.
Great. Have a good afternoon.
Cheers.